So if you're interested in swing trading, trading reversals, or trading pullbacks, this one's for you. Hi guys, hope you're well. Welcome back. Let's go through the ABCD strategy. So this isn't just for people who like harmonics. This is very, very important simply because the ABCD pattern occurs regularly, and since it occurs regularly, you must know it. And you can also use, we're going to get into the zigzag indicator, which I think comes with your broker. I'm not sure if it comes with all brokers or whether I downloaded it, but we're going to get into it. So it's another harmonic-like pattern, the ABCD. It's more common than the cipher, and it's very similar to the cipher. Remember when I talk about the cipher, it's a continuation of this ABCD pattern. So the cipher comes after this ABCD pattern. Here is what a bullish ABCD pattern looks like. So on this pattern here, it starts off with A, B, C, D, right? And then at point D is when you should be looking for a buy opportunity. And then your stop loss, you set it at 42 to 45%, 45 pips. You don't want to use 35 pips because the brokers all know everyone uses 35 pips. So D is your entry signal, C is your target. So the whole point of an ABCD pattern is to catch the reversal. So a reversal will happen, a quick reversal will happen at D. You want to catch it, target is point C, right? And how do you know when point D arrives? You know when it's point D when you measure A, B, which is the exact same length of C to D. So basically C to D, this distance is an extrapolation of point A to B. So if you want to know where D point is, you measure A to B, and then you basically extend it to C to D, and then you get your length. I'm going to show you on the chart what it actually looks like. So what tends to happen sometimes is that the C to D leg is longer than the A to B, right? And that just happens when buyers are late to get into the game, and sellers are basically taking over. The C to D leg will be longer. But what tends to happen if the C to D leg is longer is you can expect for it to be a greater buy move, right? So if the C to D length is longer, it's called an ABCD extension, and that buy will be really, really fast, and it will have greater returns. Now you can also trade at point C, right? You can trade at point C, and this would be a sell, but then you would be looking at Fibonacci's. So the C point here is basically a fib retracement of about 6118. And if you know anything about Fibonacci's, it's the golden rule, it's the golden number. 618 is the golden number. And what tends to happen with fibs, we're going to get into another video of fibs, but with fibs, the shorter the fib, so maybe it's like a 38.2 or 50% retracement, what tends to happen is that when it's shorter, it moves faster. If you also need help in understanding fibs, you can go through AstroFX's training book. You can get it for free. They really go into detail with fib retracements. I haven't seen a better book on fibs than the AstroFX book. So basically, C, you can sell C, sell C, sell C here, right? And then basically it's a 61.8% retracement if you want to sell at point C. So this is what it looks like on the chart, A, B, C, D. And if you go onto TradingView, they basically have a tool where you can use their tool, so you don't have to really measure all these distances. There's this really nice tool on TradingView where within seconds you can just plot out A, B, C, D, and then you have your buy move. Another important thing to point out is that sometimes with these patterns, it looks like it's pulling back and then it looks like it's going to collapse. Don't be bothered by that. As long as you move your stop loss to break even, you're fine, and you just trail your stop loss slowly, because look what happens. It pulls back, pulls up, pulls back. So don't be stressed when it starts to pull back and it takes a long time to reach point C. As you can see, it pulls back, almost gets to point C, pulls back, almost gets to point C, pulls back. Another thing, look at this huge point here. This is basically stop hunting. So to avoid this, you could use an oscillator to help you. Additionally, you can use an oscillator that helps you know when a reversal is happening. So just relying on measuring point A, B, C, D won't be as accurate. So you need many different confluences. So you've measured point ABCD, you're using the oscillator to also help you determine when a reversal is about to happen. And also it would also help you if you know pin bar formation, what different pin bars look like, and going down to the lower time frames and using like the 81 and the 21 crossover moving averages can help you get a good entry. So that's what it looks like on the charts. This was my trade actually. So this is a trade from notes, but this is my actual trade. So as you can see, I like this because sometimes even if you miss a pattern, you always find other patterns. Like here, there was a bullish head and shoulders pattern. So even if you missed the ABCD, you still could have gotten in on the head and shoulders. And what I like to do whenever there's a second opportunity like this is to add a second position. So you have your first position at point D, you add a second position here. This is what it looks like as a sell, as a bearish ABCD pattern. So A, B, C, D. D is your sell. Have a healthy stop loss. Don't use 35 pips. Take profit is point C. Sometimes it goes way below point C, both on the bullish and bearish ABCD pattern. What you just have to do is trail your stop loss. Try not to use the take profit because sometimes you'll miss out by just putting a take profit. Rather, just use a trailing stop loss because you'd rather benefit from it going all the way to point A than missing out. You can use the zigzag indicator, and I'm going to show you that. So here's the zigzag indicator. You go to insert indicators, custom, and then you go to zigzag. And these black lines here are what you use to basically determine your point A, point B, point C. And the nice thing about the zigzag is it really makes you see patterns more clearly. If you're someone who likes patterns, the zigzag indicator is really, really nice because then you would have seen that this is a descending triangle right here that's forming lovely, and then it just continues down here. So the zigzag indicator basically shows you when a turnaround or reversal is happening. As you can see, here's a nice W. So also if you like swing trading, if you like M's and W's, if you like divergences, then this one's for you. So here's an example of a tool you can use on TradingView to measure your ABCD patterns. So don't stress much about measuring those lines. And I use XM, so drawing these lines is very difficult. And so measuring is also a nightmare. Here's the tool you can use. You go to this point here where the ABCD pattern is actually laid out for you. So you click point A, point B, point C, point D is your entry, and then this is your target right here, point C. And then like I was saying, remember when I was saying you should have a trailing stop loss because sometimes it goes way beyond point C, and then you would have taken advantage of this huge move. Sometimes it goes all the way to point D. Now what's not certain is whether this is going to continue going down, which if it does continue going down, then point A would be your target, and then this is why you shouldn't have your trailing stop loss too tight. Don't set your target immediately. And when I say trail your stop loss, price is going down, wait for price to bounce up and then start going down, and then you trail your stop loss down. Price goes down, pulls up, starts to go down again, push your stop loss down, because what tends to happen is that price may go below point C, which was your target, and actually end up going to point A. But if your whole purpose is to just get these few pips, you'll miss out on a huge opportunity, especially if something happens and it pushes all the way down to point A as your target.